Hello, and welcome to the Community IT Innovators Technology Topics Podcast, where we discuss nonprofit technology, cybersecurity, tech project implementation, strategic planning, and nonprofit IT careers. Find us at communityit.com. Thank you for joining this Community IT Podcast Part 2. You can find Part 1 in your podcast feed if you subscribe wherever you listen to podcasts.
Hello, everyone, and welcome to our webinar called Ask the Experts Development Meet Accounting. It's presented as a partnership between Build Consulting and Community IT Innovators. In this webinar, a panel of experts from Build Consulting will be answering the questions you submitted in advance regarding how development and accounting can better work together to manage financial data. My name is Peter Miras.
Hi, everyone. My name is Debbie Cameron.
Hi, everybody. I am Peter Gross.
So we're just going to step through the questions one at a time, give our best shot at answering them. Next question is, what are some of the key problems with how nonprofits manage gift records that make life hard for accounting? I'll give an example to get the ball rolling. I had a client once that when I came into the organization wasn't marking gifts as posted in the CRM when they were moved to the GL, and they weren't using gift adjustments to make corrections to the original gift record moving forward. So basically what that meant is that rather than creating an adjustment, every gift that needed to be modified in some way was edited in the original record. And of course that it created all kinds of problems for reconciliations between the accounting system and the CRM. So figuring out a way to mark gifts as posted once they're moved across and locking them in the system so they can't be edited, and then making diligent and appropriate use of gift adjustments is a big thing. And that's an area where organizations aren't implementing that. That's one of the first things that they should look at to make life easier for themselves, so they don't have to go back looking for months to find that one gift that was improperly modified to make the reconciliation work out. Peter G., do you have anything to add?
Yeah, I mean, I think that's a really good example, and it's, what I was thinking about was sort of a broader point that encompasses the one you just made, which is, I think for our clients that have had challenges with the quality of their gift data and their ability to utilize that gift data, it has a lot to do with a lack of a clear and consistent and enforceable workflow for how every transaction gets entered into the fundraising system. So, again, human beings have a tendency to try to figure out things that violate the rule and do workarounds, and I get that. But that GL posting is a perfect example, and I'll just use Razor's Edge as an example because it's, lots of folks have it, and there's a number of different ways to enter a gift into Razor's Edge. The two primary ones are you can enter them one by one into a gift record. You open up a gift record and you enter it. The other one is through what they call their batch process, and other systems obviously have a version of this as well. What the batch system allows you to do is actually to build in workflow, build in some automation that means fewer clicks, fewer mistakes, and that people are paying attention to each one of the fields that they need to, and that the ones that they don't care about aren't even in view. And that's another example, I think, where people, because they haven't come up with a consistent way of using the best parts of whatever software system they have, they end up with where they miss things, where they make errors. Those errors either don't get identified until they end up in a financial report, or when we're doing reconciliation, or when the donor says something because their acknowledgement letter was wrong. And the more we both leverage the natural capabilities of whatever system's in place, and the more we enforce the rules about how gifts from soup to nuts get handled, the less likely we are to miss things, to make errors. And also, when we have a process, even if it's not perfect, but everyone's following it, it's much easier to then tweak that process or rework the process when we need to. because if everyone's doing it, we're going to identify where those errors are. We can make adjustments and let everyone know what adjustments were made, as well as adapt to changes in whatever software system we have. So I think being as faithful to a good process as we can be and leveraging as much of the capabilities of the software system, I think, are a couple of the larger mistakes. And I think, the gifts getting posted and not getting marked as posted when they move over to GL, that's another sort of classic thing that works actually quite well in something like the Razor's Edge. And very, very few folks actually take advantage of it, and that leads to all sorts of downstream problems.
I'm going to use this opportunity to insert an audience question, which is, our donation/membership/grants are first recorded in the Financial Edge in our accounting office, then given to development to record in Razor's Edge. Is this process being done backwards? So I insert this now because you mentioned Razor's Edge. Seemed like a good time to bring it up.
I'd be happy to take that one, or take the first shot at that one. So what I would say, without throwing anyone under the bus, is that in our experience, is that best practice is that appropriate transactions, by that I mean charitable, sometimes event registrations, memberships, in general, those should have a one-way flow where the ideal is that information only actually gets typed in once. So I receive a check for $100 from Peter Maris. I go through my process, and I'm just going to use the Razor's Edge since that was the example that the questioner gave. I enter that into my batch in Razor's Edge with all the appropriate information. It gets assigned a fund, a campaign, appeal. There shouldn't be a moment, unless you have to reverse the check or do something like that, there should not be another moment where information is typed in once that gift has been entered, because that should then be, once it's gone through the posting process, it's converted into debits and credits that are then uploaded into Financial Edge, assuming there's no problems. Again, if there's an error, obviously we need to go back and make an adjustment. Might be just an adjustment, it might be a retyping something that had a mistake in it. But in general, you should be entering that data once, and then it should flow through the system without being touched again. That is the most efficient way because only one person is typing it. It reduces the chances of errors and is certainly best practice. Now, the only exception I would give for that is there are sometimes extremely complicated grant payments or even grant pledges, if you will, where the details are so complex that sometimes it really does have to be handled in sort of a dual entry way. We've worked with some organizations that don't do a lot of sort of regular fundraising, but do a lot of very complex grants and contracts. Those can be a little trickier to have sort of the one-way flow, but in general, gifts should be entered once and should flow to whatever accounting system is in place.
Would you like to comment on the which way is more appropriate part of the question?
Sorry, I thought I did. They should enter into the fundraising system and flow over to the financial system.
Okay. Just wanted to make it
partially just because I think that is the most efficient way to do it, and partially because there is no way other than re-hand entering it to get it out of FE and into RE. No way that I'm aware of.
Right. Next question. What should we be thinking about when planning a CRM to ERP integration to help make sure the data flows properly? Debbie, would you like to take a shot at that one?
Sure. So I would say one common thing that I see across organizations that should be thoughtfully approached is whether or not you're going to set up the CRM as the accounts receivable subledger. It's a natural fit. It makes a lot of sense, as your accounts receivable subledger really needs to contain all the detail that supports your general ledger account, and your CRM, contains all of your revenue transactions, your donations, your payment history from your donors. So it makes a lot of sense. What I don't see always done is that fact be communicated across the organization. I was on a project recently where we were doing policies and procedures around a financial system, and we learned through meeting with various groups of folks that actually no one in the organization outside of accounting knew that the CRM was serving in that capacity. And when the CRM is treated as your accounts receivable subledger, the transaction data needs a little bit more attention, needs to be treated more like data in your financial system. And so you just want people to be aware of that. You want to educate them on that. And the other thing I would consider when you're looking at building that kind of integration is you're going to need reconciliation processes, and we strongly encourage our clients to document these reconciliation processes for many reasons, and I really would strongly encourage anybody to make sure they do so when they're doing that kind of integration. Thanks,
Debbie. Peter, do you have anything to add to that?
I was already starting to add something, but apparently I was on mute, so I'll try it again. No, I really like what Debbie said. I think there's a couple of things I would encourage people to think about when thinking about a CRM to ERP integration. The first one is that I think a lot of organizations we talk to and work with have a tendency to be a little overly focused on automated integrations, meaning I want to be able to click a button in my CRM and the data flies into my financial system, and no one ever has to know the difference. The truth is, that's a little bit of a unicorn. It's a difficult thing to actually accomplish. Even if you have both RE and FE, there's often some steps in there. And the truth is, if you develop a good process and a good categorization scheme for gift transactions, for most organizations, the quote unquote integration isn't really all that complicated. And for a lot of organizations, it can really be handled through a file transfer that happens. Some organizations do it once a day, some do it 3 times a week, some do it some do it twice a month. It sort of depends on volumes and all of that. But so don't worry so much about automated integration, although there are some organizations where that case is pretty clear. The other thing I would encourage folks to think about is what level of detail do you really need to come across into your financial application? Historically, and I think Peter alluded to this earlier, historically, because accountants didn't trust what was coming out of the fundraising system, they had a tendency to want every bit of detail in there because they were afraid if someone asked them a question, they wouldn't be able to get the answer and they'd have to go into the fundraising system and they didn't know how to use the fundraising system and it was confusing and et cetera. If the fundraising system is well organized, and I realize that's not a guarantee, but we help lots of folks get there. If the fundraising system is well organized, most organizations should be able to send data over in summary rather than in detail. And that's our recommendation, I would say, for most organizations that we work with. There are certainly exceptions, and the exception I gave before about organizations that really have some larger and complex gifts, some organizations will say, you know what, 98% of our gifts are going to come over in summary, but if it either hits a certain dollar threshold or if it's a certain kind of complex transaction, we're not going to bring that over in summary. We're going to bring that over in detail. So there exceptions can be made. But the simpler that process becomes, the less onerous the either integration or file sharing, file transfer becomes in that situation.
Yep. Those are good points. Moving on to the next question. I guess we'll just go to the next question. We're thinking about changing our CRM and or ERP system to help solve our financial data flow problems. How should we approach this process and what systems should we consider? That is a loaded question.
It is, and it's my favorite question. It's my favorite question to answer because I generally don't answer it directly. Meaning, it's difficult in the abstract for anyone to say, you should go to the Razor's Edge or Salesforce or anything else, or to Intact or to Financial Edge or those kinds of things. Because the question was phrased in sort of the within the context of solving financial data flow problems, I think really the most important thing to be thinking about is many of the things that we've talked about already, which is in most cases, financial data flow problems are not about the underlying technology. They can be. There's certainly some systems that do it better and some systems that do it worse. If you're on a very old legacy system, it can be very challenging in some ways, either on the CRM or the ERP side. But the truth is, these are usually business challenges. If it's not flowing properly, it's largely because of how it is categorized, the process that's in place to create the transactions and then send them over, the match between how the CRM system is configured and the ERP system is configured. Those are usually much, much more important questions that frankly should be answered first, and then based on that business solution, identify what systems do we need to switch systems, number one, and number two, what systems might be the most effective in not only the transfer of data, which is important but not by any means an overriding concern, but all of the other ways in which those systems might help you run your business more effectively.
Right. Yeah, I think you need to look at the whole picture. The specific solution you select depends entirely on your requirements. And when you're making such a big purchase decision, you should look at those requirements as broadly as possible. I would say that generally our clients are moving from what I might call legacy or on-premise solutions to cloud solutions with better web capabilities. On the ERP side, more dynamic charts of accounts. Generally speaking, have better data integration or import-export tools, better APIs. Generally speaking, much better workflow management capabilities. On the CRM side, I think we've seen organizations move from outdated systems to modern or modernizing solutions. So modern solution, I might put Salesforce or EveryAction or maybe Roy Solutions into that category. For modernizing, I would say RENXT falls into that category. On the ERP side, it's been mostly what we've been hearing lately and seeing at our clients is Intact and NetSuite. A lot of clients in the Microsoft Office 365 ecosystem or that are otherwise very Microsoft-centric wonder about Dynamics 365 ERP in part because whenever they add Office 365 licenses, they're offered licenses for Dynamics. We think for most nonprofit organizations that Dynamics 365 ERP won't be a good fit. It isn't a mature enough product for the average nonprofit. So again, there's a lot of different things to consider, a lot of different products to consider. We help clients go through structured selection processes, assessment and selection processes that leads to choosing the right technology. It's way too big of a subject to get into in any depth today, but those are some of the solutions that we see and help our clients consider. I've been doing a lot of work with Intact lately, and has been very good at solving a lot of problems for my clients. So here's a related question. Have you ever had two nonprofits who needed essentially the same application share the development cost? I have, yes, particularly when Salesforce was new to nonprofits. I've heard of other instances. Vendors usually shy away from it because it's unclear from a project governance standpoint who's driving the requirements. And I would say that 95% of such projects usually don't end well or end in some kind of failure that results in a re-implementation later on. Debbie, I know you've had some mixed experiences with this.
Yeah, I had a client partner with another organization. They were similar sized, and they needed some functionality that didn't exist and they had both chosen the same CRM system to implement. They were not successful. The main problem, we spent a lot of time lobbying the vendor to agree to do it, and then once the vendor agreed to do it, we launched into design. And it took a couple weeks into design for us to realize that while on the surface our requirements seemed alike, when you dug into the details, they were not. And so we basically had to start from scratch independently. Both organizations did. And we had wasted a lot of time lobbying the vendor and then going through that design and ended up having to pay for it, both the jointed effort and then the redesign. So that was not successful. There was another instance where two organizations, they pulled together, and the requirements ended up being fairly, even from the detail perspective, being fairly similar. So we were able to get development to a certain point, and we were able to share that cost to a certain point. I would say there was some hidden costs there in terms of just design taking longer when requirements were communicated differently, even though it was the same requirement. Getting through the different terminology and taxonomy of the organizations sometimes would take some time, so it took a little longer. And then in the end, when it was delivered, we still had to make it fit the unique needs of our client, and the other organization had to work to make it fit the unique needs of theirs. So all in all, in that second effort, it was more successful. And, I do believe we saved some money, but I don't know that the amount of money saved was worth the extra time it required of the staff and the project team.
Yeah, I think, sorry, go ahead, Peter.
No, I was just going to say, if, one of the things Build Consulting says a lot is that 50% of technology projects fail. And I would say close to 100% of those project failures are single organizations trying to get things done. If you just take the example we've been talking about today, which is how challenging it is to get two departments with different perspectives thinking about something as relatively simple as a gift record in a unified and collaborative way. And those are people that all answer to the same executive director or CEO. Anytime you add a different entity into the mix, the complexity level shoots up and the chances of success goes down. That doesn't mean that there's never a case where you could make that happen. But it's very, very difficult and would take an extremely strong project team to be successful with that.
Yeah, I mean, it depends on scale and a number of different things. But yeah, without knowing more about whomever submitted that question, feel free to follow up with us if you have some specific stuff, and we'll be happy to give a more informed viewpoint. But generally speaking, that's not worked out well in our experience.
Yeah, and I should just say, Peter, that I know there have been examples in the past, and this was a while ago, but of Razor's Edge customizations, which I will grant you back then was not an easy thing to do. But folks that came up with Razor's Edge customizations and then were able to recoup some of the cost by sharing those with other organizations who maybe took that customization and made some tweaks to it. That kind of approach is probably more likely to be successful than trying to build something from the ground up with two different organizations or more trying to figure that out.
Right, but then you have to be willing to be in that business, so to speak, and know what that entails.
Agreed.
Yeah.
Yes, indeed.
So we've got time for about one more submitted question, and we did get a lot of questions that are like this that are sort of more appropriate to ask your accountant or auditor. But it's sort of the question is what items in the new FASB financial reporting rules have the biggest impact on nonprofit GL structures and GL feeds from the CRM systems?
Please don't give that to me, Peter.
I'm assuming I will take responsibility for this. I'm assuming this question is pertinent to FASB topic 606, which is related to revenue recognition standards. And the thing I will say about that, based on my awareness of the 606 protocol or framework, is that it pertains primarily to sort of contract relationships between a nonprofit and a customer. So where the contract is implied or has some sort of pay for performance or some sort of fee for goods or fee for service component. So an example of a relatively simple and yet at the same time complex example of this might be if you were a donor and you buy a ticket for a fundraising gala event, and a certain amount of the ticket their value is provided to you, and there's sort of a contractual obligation for the organization to provide you with a certain value, whether it's the meal or other perks in exchange for that, and then a portion of it's also tax deductible. So essentially, when you're recognizing that revenue, you might have to recognize it at the split at different times and in different ways. But I think for organizations that already have GL accounts in place for those kinds of sort of contractual or fee for service or fee for good type of situation, the GL might not need to change all that much, if at all. It's more about management making the decisions to clarify when an organization is in a contractual relationship with customer, quote unquote, or not. What are the performance expectations within that contract relationship, and how those need to be estimated, and the value of the transaction applied, and all of that different kind of stuff. So if you're interested in learning more about that, Grant Thornton put out a great article on that subject. So if you Google Grant Thornton Nonprofit 606, you'll see a good article about how nonprofits can implement those revenue recognition standards. And it encompasses both policy, compliance, technology, and reporting. And it's written pretty accessibly. At least I could understand it. And that means generally it's accessible. So that's all we have time for today, really. Thanks again, everybody, for attending. And thanks, Peter Gross and Debbie, for serving as our experts today.
Thanks, everybody.
Take care. Have a good one. Bye.
Thank you for joining this Community IT Podcast Part 2. You can find Part 1 in your podcast feed if you subscribe wherever you listen to podcasts. Community IT does these free webinars and podcasts for our community, and we love sharing our knowledge and experience. If you have more questions or are having trouble with your IT at your nonprofit, please get in touch with us on our website, www.communityit.com, so we can start a conversation or schedule an assessment. Downloading any of our free resources there will get you signed up for our webinar reminders, and you can attend our next webinar in real time and ask our experts your own questions. If you love podcasts, please subscribe and leave us a rating to help others find this leadership resource for nonprofits.